Hello, and thanks for joining us today. I'm super excited you could be here. Today, we're talking about my favorite topics in the world, business credit and financing. And we're going to tie those in and talk a little bit about how that can help you exit your value at maximum or exit your business at maximum value and how to make a lot of money with your business just by getting access to the capital that you actually need. So, with us today is Dr. John Prudhont. Now, he's actually known as Dr. J, which is way easier for me to pronounce than trying to pronounce his last name all the time. He's a seasonal financial executive, business broker, and educator with more than 40 years of experience across financial services. He's been in real estate, he's been in mergers and acquisitions. He was actually raised in LA by a middle class family, and he built his career from the ground up, holding leadership roles with major institutions, including Northwest Mortgage, as well as Lomas Mortgage USA and First Nationwide Bank. Now, he's actually the co-founder of multiple different real estate, finance, and M&A firms, and he also currently leads the Business Brokers Inc. in California and Nevada, advising Main Street to middle market companies on exits, on valuations, and deal structure and negotiations. And he also serves as the current head of strategic alliance at Credit Suite. Now, Dr. J also serves as a treasurer of Nye County, Nevada, where he actually managed and grew a $130 million public investment portfolio. And he's also an accomplished academic. He's taught economics and managed at the university level. He holds an DBA in financial management, an MBA in finance, and multiple real estate and business broker licenses. Dr. J lives in Las Vegas with his wife and business partner Eileen and their family. Hey, Dr. J, thanks for joining me today.
Hey, how's it going?
Hey, man, you have a lot of experience. You've done a lot of stuff over the years.
I tend to do just I'm all over the place. I love learning. One of those things about one of the things that I've come across over the years that I keep doing is I'm a lifetime learner. I just can't stop learning. There's so much out there, so much interesting stuff.
So what in this, if everything you've learned, you've done so many different things, like in M&A and so many things. I love your background because I'm interested in all the things that you're interested in. So what brought you, because a lot of it seems to focus on financial services. Like now you're helping a lot of business owners get capital. So what brought you to that? Of everything you've learned and all the education that you've obtained, like what keeps bringing you into that back to that financial services segment?
Well, I think a lot of people of, my generation watched Wall Street. And so we saw that mergers and acquisitions kind of stuff and all the money floating around and going different directions and could not figure out how to get involved in that kind of a business. And I think many times people fall into the things that they end up doing. And I ended up falling into the finance business in between a little break I took while working on my BA. I ended up doing factoring for an alarm company of alarm company accounts to a central station monitoring company, and I was hooked. I mean, I love finance. I love the variety of things that one can do. Um, I love the challenges of helping people understand how to do different things. I love systematizing things so that you can have things repeatable. And the finance industry is huge. That there are so many different opportunities, so many different options, so many different interconnected things with it. And credit is really one of those things that most people, I mean, when I was growing up, my parents never talked about finance. So, there's another very, very well-known investment educator out there who talks about the idea that, most of us, our families didn't talk about finance. So we had no idea what we were getting into. It was like pushed out of the, house when you turn 18 and hey, do what you can. So I've been on a quest and I'm still on a quest. I have my doctorate in financial management and I'm still on a quest. There is so much out there.
Yeah, it's really interesting, and I love that your quest has brought you to so many different places, like in the finance world with M&A, with financing, and you've talked about credit. What is it that you really are passionate about with business credit?
Well, decades ago when I started my first business, I couldn't spell business credit, and there really weren't any resources. The internet was in its infancy, so trying to find out information and going to as an example done in Brad Street, which is the main repository for business credit. You got no help really. You talk with people on there, and they'd say, "Well, go out and develop your business credit," and I would be going, how? So over the years, I spent a lot of time, a lot of effort, a lot of energy, a lot of money really, to find out how to build business credit effectively. And I stepped on a lot of landmines in that process. So financial education, helping people understand why things are the way that they are and how they can utilize the systems that are available out there to be able to basically leapfrog over the years that I spent struggling with business credit. And I made all the classic mistakes. I did personal guarantees because that was all that was available to me at that time. And I didn't really know what the difference was between a business getting credit and your personal credit. I thought it was all tied together. I thought if you built your business credit, that it would automatically lead into the ability to build business credit. So I love the idea of helping people learn and avoid, like I said, landmines that I stepped on just everywhere. Trying to get to a point where not only trying to build a business, but also being able to have the liquidity to be able to finance the things that I needed to do and not have them all affecting me personally.
Yeah, that's powerful. What are some of the things that business credit does? Some of the benefits, some of the value that it provides, like entrepreneurs that most business owners out there just don't really know.
Well, years ago, I became very, very interested in the idea of asset protection. And so I went through a course that I had to pay thousands of dollars to go through to be able to find out how to segregate my assets. Because I didn't want my family to be stuck with the wreckage that can come with your business being sued for whatever reason. And operating business in California, it's a highly litigious state. So I tried to hedge that. So one of the benefits of business credit and segregating your business credit from your personal credit is the ability to be able to hedge against risk, the risk that any business has operating. All businesses have risk. I mean, you're out there, you're dealing with the public, you have products, you have services, and people can be unhappy about anything, and they can turn around and they can sue the business. And what you want to do is want to make sure that your business doesn't take your whole financial picture down, and you don't lose everything.
Yeah, and literally that actually happened to me. It's interesting you say it because that's what brought me into the whole industry. Like I owned a mortgage company, PG debt, and then the mortgage industry collapsed. Like right there, I mean, literally what I did just stopped. It wasn't even my own accord, right? I mean, like what I did overnight didn't exist with jumbo loans. And then because I personally guaranteed it, I mean, literally the bank came and cleaned out all the funds from my personal account. And then they started to report stuff in my credit report. So I thought I had all this available credit and it went to zero because business debt showed up there. And then I thought I had all this money in the bank and it was wiped out. And so it's like I thought I built these protection layers when you talk about asset protection and pre-PGing it completely wiped it out. And so it's interesting you say because that's literally what led me to find business credit originally.
Sure. I mean, the whole financial industry structure has risk. And one of the things that a lot of people find out as they go through developing their business credit is that the lenders that are lending money, they're hedging risk. And so what they're doing is they're looking at people and they're looking at their businesses and they're trying to make the best bet, knowing that running a business is risky. Walking out your front door is risky. Let me just put it that way. So it's not like business, establishing businesses and growing businesses is so much more risky than our personal life. There's risk in everything. So the question is, as a lender is lending out money from the investors that have put their money in their care as a fiduciary to take care of that money and then be responsible with lending that money out, whether or not that money is going to people in businesses that are within the risk tolerance of the investors. And that's one of the other really interesting things about finance is that you have different risk tolerance. So each of the different lenders that are out there, they typically aggregate money. And the investors that they get the money from, those investors are told, hey, you know what, I'm going to turn around, I'm going to lend this money out. We're expecting this kind of return interest rate to offset your risk, but we're not going to lend it to just anybody. We're going to do a particular, what people in the industry refer to as a credit box. We're going to say that within this box, these certain parameters are going to be followed. And if somebody falls outside of that for some reason, their business falls outside of it, then we're not going to lend money to those businesses. We will stop there. So we protect you. You know what your risk reward equation is. And what we're going to do is we're going to make sure that the money that your money that's lent out there follows this risk reward tolerance equation.
Yeah. And I love that. And I love that you mentioned that because I don't know why, but I never even talk about that credit box. But it's like a legit thing. And that's what I talked to lenders about directly. It's like if it doesn't fit their box, the person just gets denied. They get declined. And if they do fit the box, then you can get it. And so business credit, is a powerful way to be able to help them fit that box. But um talk to that a little bit. Like what is a place that business credit fills in helping somebody actually qualify to be able to get credit cards, loans, or credit lines to grow their business?
Well, it's like building anything else. There's a foundational level, and most people really don't see that it's actually a process. So if you end up doing the process in the way that it structurally makes sense as you're building this foundation and building, the structure on top of it, then you'll end up getting that credit. If you try to bypass it or you don't happen to know what the different steps need to be, then you won't end up building that foundation. And when you go to a lender, the lender will look at what your financial package is and will say, does this foundation something that will fit our creditors, sorry, our investors' needs as far as a lending risk.
Yeah. We talk about a little about lending. And appreciate that insight. When you talk a little bit about lending, you have a lot of experience in that area too, like AR. You dealt with a lot of different types of financing. So, what do you find right now? I think there's a lot of people out there that are struggling to get financing, and it's like a lot of the lenders have tightened criteria over the last 2 years, and yet all the statistics show that people's credits got worse. Like businesses are not making as much. So, what are some of your favorite funding options you're seeing out there right now that you think a borrower can get, even though a lot of borrowers think that they might not qualify for financing?
Well, I want to preface the answer to that question by saying that there are all kinds of lending products out there. I look at them as vehicles. And I think the best way that somebody once explained it to me is how fast do you want to get to where you're going? And what kind of risk does that involve? If you're walking down the street or you're walking in a field, what kind of risk does that have in comparison to driving a Maserati on a one lane, very curvy road, and in California as an example. So the question is how that all fits together. So you have lenders who run the spectrum. They go everything from credit card lenders, and on the far, I guess on one end of the spectrum is the idea of being able to come in and most people don't even consider this to be credit. Of course, the businesses should, but coming and getting business products or services on account. And what that means is you're walking in or you're contacting a vendor, and the vendor is providing you with goods or services that you turn around, and maybe it's on a wholesale level. They give you the wholesale price, you turn around and you retail at your retail price. But you're not paying for that up front. What you're doing is they're giving you 30, 60, 90 days to go ahead and pay that whatever it was that you bought, pay that off. So that's a form of credit, a business credit, that most people, I think, don't even really think about when they think about credit. They think about things like credit cards. Maybe they think about merchant cash advances or MCA loans. Maybe they're thinking about, it depends on I guess, the revenue of the business as to what kind of debt they might be thinking of. Because you might have a company that's a corporation that's looking at issuing debt in the form of a bond. Or you might have them issuing stock, which is debt.
Yeah, I love that, and I love you talk about that because I oftentimes bring up Walmart, and that's the way Walmart is. Like to your point, like they're literally people don't understand that the stuff that you go to Walmart to buy, like it's not even theirs. Like they're literally use that credit you're talking about to buy that stuff. Then they put it on their shelves, and then you pay them, and then they take your money and they pay off the credit. Like I mean, that is literally their entire model with 8 out of 10 products they sell. So it's like you look at the biggest companies that are out there, privately and publicly owned, And that's exactly what they're doing. I mean, that's how they've got to be as big as they are. So what do you say to those people that are like the Dave Ramsey kind of people of the world in business, where they don't think you should take on debt? They don't think that you should give up equity in your company because you're an M&A guy. So you're used to seeing that businesses exit and sell, and those percentage of businesses that did it bootstrapping versus, raising money, whether it be venture capital or debt. I mean, what do you say to that group out there that just kind of is not really a big fan of, or even think that a business should take on debt or should borrow money, or take on equity investors?
Well, it goes back to the analogy of, walking in the field to get to the next town, or driving a Maserati on a three-lane highway to get there. The question is, how fast do you get to your goal, or do you even make your goal? Um, Leverage is one of those things, and what debt is, it's leverage. It's the ability to use something small to get something bigger done. That's all debt should be. The problem is that it can be used in many, many different ways that are not successful. And so when people go those different directions, then they become examples of, well, you shouldn't have gotten debt. The question is whether or not the business is in a position where it makes sense for the company to get debt to accomplish a particular goal. It's not to go out and get money, or go out and get credit on your business to go out and, buy a bunch of luxuries for your personal life. The whole point of this is to be able to grow your business with cash now that you'd have to wait months, maybe years to receive, so that you can leapfrog and be able to invest that money, make that money work for you to be able to get to that next stage. So that's the type of situation that unfortunately, from what I know about Dave Ramsey, he doesn't really make that distinction. All debt is bad. Bad, 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 bad. Not all debt is bad. The way that a business or a person ends up using debt can be good or it can be bad. It just depends on how they end up using it and whether or not they've done kind of what I refer to as their due diligence. Have they evaluated whether or not what they plan to do with that money actually makes sense? Do they have the metrics, the data to be able to make that kind of a bet with the money that they're being lent? It's kind of like, I guess a good analogy is there are companies out there that will not lend money to real estate agents. They will not lend money to house flippers because they don't trust that the economy might change overnight and somebody may be stuck with a house and not be able to pay them back. But there are other lenders out there that their investors are perfectly fine with that. It's higher interest rate, a higher return, that offsets the risk for their investors, and their investors are perfectly fine with that.
I love talking to you because it's like literally, I mean, it's like talking to like another version of me. I mean, like legitimately, like, and I mean, it's just interesting because I thought about that while you were talking. It's like the highest, just the strategic use of debt. Like I couldn't have articulated it better. It really is the way to do it because the highest interest rate I've ever seen, the guy paid 65% on equipment financing. Now, a normal person hears that and they're like, never would do that. What? But this guy bought a tree distumper for a golf course, which I didn't even know a tree distumper was a thing. I didn't know it was a thing. But this guy was building golf courses, and it's 65%. He writes off all the interest, and he saved like over $10,000 a month from the labor he was hiring. Right, so he's hiring people and managing people, and people show up and they don't show up, and it's $10,000 more to pay all this labor. He was ecstatic to even get approved, and he got approved for 65%, saved $10,000 a month. But to your second point there, the reason he paid 65% is he kind of sucked as a borrower, right? I mean, let's be honest, like you don't get 65% if you're a low risk borrower. And that's what I love about the lending environment we're in is that like these higher interest rates, these alternative lenders, the ones with the risk thresholds that you're describing, they're the ones that make this alternative lending world exist. Like not, from what I see, 9 out of 10 people that are getting business loans now never would have got them 15 years ago. They never would, it would never even would have happened. But these alternative lenders with a different risk threshold, to your point, come into this space. They're lending money, and yeah, they're going to charge more. You're higher risk. Like there's things you could do, and we'll talk about the things that you're suggesting that you could do to lower the risk. There's things you could do to lower the risk, but like you never would have got this financing. And then if you take it and you use it wisely, then it's like just like you said, it multiplies your money at that point.
Well, that's one of the other things too, that over the decades, you hear all the time on the general media. They're talking about how debt is bad. Um, People are ripping you off if they're charging you high interest rates. And the thing is, if you couldn't get that money any other way because of your credit profile, then they're not ripping you off. They're giving you an opportunity to do something that you would not otherwise have been able to do. And the other point, as I tell people, if you feel one doesn't make sense for you, don't do it. Just don't do it. But don't do it. Take that money and then complain to everybody about it. Put it to work. Make sure that your return on investment is higher than the interest rate that you're charged. That's one of the key pieces of the whole equation. You don't go out and borrow money I mean, let's look at it from another standpoint. Um, a huge point here is the idea that when large businesses are out there looking at the idea of making money, they're not just looking at the interest rate. They're looking at the interest rate in context of the cost of funds for them. And every business has a different cost of funds. What kind of return on investment are they looking at the idea of doing? And there are equations to be able to figure out whether or not something makes sense or not. And most people, and this is one of those other things, it's like going to business school, you learn all these things. The average person out there doesn't learn these things just from walking around. They don't know. So they go, hey, I'm going to go out and I'm going to borrow money. I think this is a great idea to invest this money in whatever product or service that I'm going to invest in. And then they don't have any idea as to what possible return on investment that they're going to get. And they may shoot completely high and make a ton of money, or they may end up making less money than it costs them for those funds. And in that situation, of course, it's a bad situation for them. But these are all of these things, like I said, I grew up in a family, my dad was a union electrician, my mom was a nurse. I didn't know anything at all about financing. When I went out and got loans, I went out and got, a credit line from the bank. I ended up getting credit cards. I ended up getting a loan to buy a $25,000 copy machine, because it had, have service over a certain period of time. Those things I had no idea. To be able to go, hey, how many loans or how many real estate transactions do I need to do on a monthly basis to have this copier make sense? And that doesn't make sense on the front end. So I guess what I'm saying on this is, the interest rate is important, but it's important to look at it in relation to what your plan on return investment is, what your estimated return on investment is. If it exceeds that, you're making money. It doesn't matter what that interest rate is. And the other thing too, that I talk with a lot of people about is the idea that you may get into something now that might happen to have a high, what might be considered to be a high interest rate. But there's nothing that specifically stops you from over time working on your credit and getting yourself in a better position so that you can qualify for a loan or credit line or merchant cash advance or whatever the financing ends up being, that you can now refinance out of that loan to a lower interest rate and even increase your ROI more. So
Yeah.
these are some of the things that Dave Ramsey doesn't talk about. But I really feel, from what I've seen from him, he's talking about consumer credit. Consumer credit and business credit, they might as well be in different universes.
Sure.
Um, all credit is not the same.
Yeah. Really, really, really valid points. You've talked a little bit about qualification and how it affects somebody, and the kind of rates and terms that they're actually able to get. What do you find is, what are some things that people overlook that they should be doing to set themselves up for success, to be able to qualify for more financing, to be able to get more money, to be able to get better terms? Like, what are some of the setup and the structural things of a business that make an impact to help a business owner get the most money at the best terms?
Well, I think the answer to that is probably a course that would take about 8 weeks for us to cover. But it is a great question. Um, Really, business entity is the first step. And when you start a business and you don't have to have any kind of background in business, what is a business entity? A business entity is something that separates your business efforts, your business work from your person. It creates an additional person, and that person is now doing something. You're the brains of that person, usually. So you might have a limited liability company, or you might have a C corporation, or you might have an S corporation. Um, Usually setting up something like that, which is an entity that is a separate person, is one of the first steps that people need to do when they're looking at the idea of building business credit. Because if you don't have that entity, you don't have a business for people to lend to or companies to lend to.
Yeah.
So that's kind of the first step. The next step is, of course, getting set up with a DUNS number, because the for credit as your business is initially establishing its credit. And this is not for larger corporations. I mean, you've got other credit repositories for larger corporations. And for the smaller corporations or smaller companies, Dun& Bradstreet and Equifax are pretty much the two. Equifax Business, not Equifax Personal. So, to have those entities, you need to be able to have those entities to be able to initiate your credit building process. Additionally, you have to have a business location. So the idea of, it's a great idea to work out of your garage. I actually did for a period of time. It was nice to be able to walk out of my house and go to my garage and work from there. But that's not the type of thing that you're looking at for establishing business credit. Because once again, these things are to separate. Another piece of the equation that most people don't think about, and I especially run into this with Main Street and lower middle market businesses in mergers and acquisitions, is an accounting software system that is reliable and that allows you to be able to produce the three financial statements that you need typically when you're getting kind of lower middle range credit. Businesses need to be able to see that, and frequently they'll also need to see tax returns for the business. So these are things that it's we don't fall out of bed one morning and have all this information in our mind and we're able to use it. Usually it takes a lot of time, and typically that's why there are systems for people to plug into, and that those systems make it faster for them to develop their credit profile and get credit. 'Cause, I mean, the first step is, starting off for businesses that didn't exist last week is to start creating smaller credit limit credit. And you're very familiar with this, obviously.
Yeah.
But I mean, you're looking at credit business credit cards that don't have personal guarantees. You're looking at business credit lines that don't have personal guarantees. Because of course, there's a ton of them out. In fact, the first one that I was offered from a bank that I did business with for years, I didn't know it had a personal guarantee. They were like, "Oh, here's a credit line. We can give you this dollar amount." And I thought, "My God, that's great. I can use that money for my business." I had no idea I was personally signing my life away. So, those are typically some of your first two. Others are setting up accounts uh, with vendors who happen to report to the credit bureaus. Even if they don't report to the credit bureaus, finding out whether or not they'll provide you with a letter that talks about your credit history with them that you can then use and submit to DNB for them to be able to kind of establish a non-traditional credit profile for you. The biggest challenge on that is that, of course, you need something that's going to be reporting on a regular basis, because that's what develops that history, not just a one-time, one-shot letter deal.
Yeah.
Um, so
I
that's
love
that's
it.
kind of the beginning of the stages.
Yeah, that's just like you said at the beginning. We for hours we walked it up. You hit on a bunch of really, really strong points and things that I don't even really think about or talk about that are really important for somebody being able to maximize their ability to get approved. I love the way you think. I mean, you it's really cool because you bring this real world experience in combination with education, which is just something I don't usually see out in the world. And so it's a really interesting perspective is the outcome. I could talk to you forever as a result of that. But as we're out of time, let me ask you this. Where can everybody go to be able to learn more about business credit, setting up their business for success, about kind of getting financing for their business?
Well, of course, Credit Suite happens to be the company that has a system that's designed to be able to help people to build their credit foundation and also get to the point where they're able to get larger loans once they got through the process of getting in place the foundational elements that they need to be able to move forward. Um, you know, there's all kinds of resources that are everywhere on the internet. The biggest challenge is the veracity or the truthfulness. You know, when I was working on my doctorate and also on my MBA, I spent a lot of time doing research. Spent a lot of time looking at primary source materials that were based on research that had actually been done out there. And the information that's available out on the internet, the information that's available online, or even sometimes in periodicals, it typically is based on this research material that's been done based on scientific research for whatever purpose. The problem is that there's no disclaimers there. In the research papers, it specifically says, hey, you know what? We went and we looked at this individual situation very narrowly here to be able to control the variables. And so this might be the result that you get if you happen to do the things that we seem to think that might be real. So one of the other things, not to take the whole day here, but I mean, you got PhDs that are doing that kind of research. Then you have, people that have applied doctorates like me who are going taking that research and going out and applying it to businesses and saying, well, hey, does as an example in this situation, does Credit Suite in this particular narrowly defined situation, does this seem to be real? Does this seem to be true out there? And then you have to have multiple people do that. And then all those people get together and they go, hey, you know what? We think that based on this volume of information, that this theory that a PhD came up with might be true. It's very similar with what you end up getting as an end user on the internet or, from a business periodical. You end up getting somebody that's reading that is trying to apply that broadly. And it was never designed to be applied broadly. So
Yeah.
you need to go to somebody a company that specializes in this kind of thing. Otherwise, you'll end up being out there like me, where you step on a bunch of landmines, spend a bunch of money, and it takes you forever to get to the point where you can actually do what you want to do with your business.
Yeah, I love it. So Credit Suite, creditsuite.com. You also gave me a link to a blueprint, and it sounds like at the blueprint they're able to kind of figure out if they're ready for funding, get business credit financing. So I'll put that link on the show resources page, creditsuite.com/blueprint. Dr. J, thanks for joining us today.
My pleasure. I really enjoyed this. Thank you.
All right, have a great day.
You
So
too.
listen, creditsuite.com/blueprint is where you want to check out. And if you go there, what they've done is Dr. J's so kindly put together a special link. You're not going to find this thing, I guess, anywhere else that you're going to look online. And it gives you like a funding ready score. It tells you like how ready your business is to get funding. And then it'll actually give you custom business credit financing recommendations based on where you are right now. So check it out at creditsuite.com/blueprint. Thank you very much for tuning in. Take care and have a great day.